Hey guys, Dave Hathaway, another deal day where each week we look at a new market and a new property, determine if it makes sense as an investment property. This helps us build repetition, discover new markets, and become better investors. This week we're going to look at a property in Riverdale, Maryland, which is in Prince George's County. The property address is 6316 57th Avenue, Riverdale, Maryland, 20737. And like always, we look at the market first to see if it's healthy. The overall market, it has population growth of 1.05% in the past year. It has job growth of 2.5%. It has an unemployment rate of 3.7%. It has a average household income in 2021 of $89,000, and it has a medium sales price of $425,000. So Prince George's County is a very healthy market. All of those signs are great. Next, we look at the Google Street View test. And if you look at this, it's actually kind of cool. You can see that there was a house that looks like a burnout and they fixed it up. And this is the house that's next door. But if you look around, there's some old dated houses, but the area is getting renovated. So it passes the Google Street View test. Nothing that stands out that's bad. As for the listing, this is a single family property listed at $350,000. It's 1,025 square feet. It's a 4-bedroom, 2-bathroom, and I give it a rehab budget of somewhere around $15 a square foot. You could probably bump it up a little, but that would come out to somewhere around $16,000 to $20,000. My rehab suggestions are take down the white lattice that's in between the kitchen and the living room. It looks terrible. I don't even know why it's there. Change out the lights and fans. They are dated. They don't match. They're ugly. Change out the Christmas color rugs. Even though I love Christmas, red and green got to go. So get rid of the rugs, paint the rooms back to a neutral color. Unfortunately, we don't love dark purple. Put in stainless steel appliances. Definitely need to work on the landscape to give it just a little bit more appeal. And if you could reconfigure the downstairs just a little bit so it flows really well. I can't totally tell what's going on or where the downstairs bedroom is, but it would be nice if you could reconfigure it, maybe squeeze another bedroom in there. That would be great. Moving on, taxes are $3,191 a year. Zestimate, or Zillow's rent estimate, is $2,636 a month, which I tend to agree with. Comps come in the low 300s on properties that look decent. And then if we move on over to the analyzer, what stands out is low ROI on cash flow, around 5%. And that's if we purchase the property for all cash. And then negative cash flow when we add in leverage. We never like properties that are negative cash flow. They just don't make sense as investment properties. So when I look at the analyzer and I start playing around with the numbers, this one could make sense if we put in an offer at $235,000. If we do that, the cash flow numbers come back at 8.26% if we purchase it with cash, and then 8% if it's levered or we have a loan on it. So this would protect ourselves if we get no appreciation, and we get the upside of appreciation, which would make this property a great deal. That's where I'd put an offer on if I was offering on this property. But otherwise, if the seller wasn't willing to lower it, $120,000, which they probably won't be, I'd say this is no-go on the property, thumbs up on the market. If you like this kind of analyzation, you find it valuable, I'd love you give the video a thumbs up, subscribe to the channel, as we're always trying to teach people how to best purchase rental properties and how to start getting cash flow from their first rental properties. So I'll see you guys on another deal day. Adios.